SpaceX, just to share with you, if you go to the billion-dollar fund manager rank, that is on our list. It is, as of yesterday and today, number 53. So if you zoom down, it's always kind of fun to see MongoDB and shop near the top, but this is like the cream of the crop for us. But it's you come down to 53 SpaceX on the new list. So let's take a peek at it. Obviously, IPOs are challenging, and it's had a really great run off the bottom. But here's what's so cool about this is why I'm a little obsessed with this tool. So we have to wait for a little bit of data to come out, and you had all these red negative momentum arrows, and then they stopped on August 3rd. Now, for those that can't help themselves and they buy momentum, I would wait for the gas signal, but pretty wild, 20% from those closes. But you see all the clustering of the green positive momentum, which doesn't mean anything that's going to happen with guarantees. It's just said there's a higher probability that it increases. And now this is your important day. August 7th. This is your gas plus confirmation. This is when it has the ability to show up on our lists. Welcome to Trends with Friends with Invest with Rules. It's August 14th. The summer is coming to a close, and we have some resurgence, which is really nice to see on the AI front. So we have a lot of topics around the boom and the bust. We have a really cool segment to share with you of things to think through as this is happening. I know it's on a lot of people's minds. I'm here with the great Mike Olafson. Let's dive into the disclosure, which is just this is just information. It's not a direct solicitation to go buy or sell anything. We please ask that you do your due diligence, manage your own process that fits you personally, manage your rules, your risk. You know how all that fun stuff works. At Invest with Rules, we have a really core belief system. We follow the trend, we follow big money, and we follow a lot of risk management rules. We thank you so much for being a member. This is Invest with Rules. If you have questions, this is the perfect venue to do so for self-directed investors. Hello at investwithrules.com. The reality is growth stocks got hit really hard in July. It's for some folks, that means position sizing has been more of a challenge. Stops have been more of a challenge. So if you're just kind of looking for a little bit more time freedom, we totally get it. If that's the case, just there's never any pressure. Just check out IWR Advisors or just email us. Whatever we can do to steer you in the right direction, that's important to Mike and I. Okay, segment number one. We're going to cover, this is Jay Martin. Jay Martin is a very popular commodity podcaster out of Canada. And he had a very viral post, and I'd like you to either think about it or see it. We're going to go through some of his main points. This is kind of like when you're on social media ever and you see like someone make a recipe and then you see someone else comment on that recipe. Because people, I think, are paid or something to just produce tons of content. And some of these recipes are absolutely disgusting. And some of them are absolutely delicious. So we're going to share with you Jay Martin's take. And I think it's really interesting. And what he says is before a collapse, nothing looks wrong. The numbers are printing records. Money's flowing. The people are warning about it or left out of the room. The last time was the housing, and today it's the AI. And I'm not here to do any doom and gloom. We're just going to hear his points and his thesis. And this is the YouTube link. It's on the world of X as well. So here's Jay's thesis that OpenAI, Anthropic, and the entire AI complex are the future next industrial revolution, but there's an enormous amount of debt. And the reality is they don't have earnings, they have some profits, and they've done a lot of IOUs. So OpenAI has a massive valuation now, and they have IOUs going out to a lot of the hyperscalers, which we're going to get into, $2.1 trillion in promised future payments. So, like, what does all this mean? We're going to dive into, and why on earth does this matter to you? Why does it matter to me and my family? And the answer is the S&P 500 today, the top 10 holdings account for about 40% of the weight today. And the other 490 companies are about 60% of the weight. So if most of these companies have in essence lent money to AI companies, and they're, in essence, at some point have some challenges, it deserves our attention. We're going to talk about China and their AI platforms and what they're coming out with, and they're not exactly the same, whether it's Kimi or a few others from Moonshot. But I think this is where Jay makes his point. So here's his correlation. We all remember 2008. I remember it very vividly working at Fidelity, but 2008 was miserable. But then what Jay says is you go back to 2006, and Ben Bernanke was quoted saying a gradual cooling rather than a sharp slowdown. And what was really interesting in 2006 were home prices were still rising, but they weren't rising as fast. And that's the key is looking out for the moment where the rate of change slows. In 2006, they created a mortgage product called a 2 and 28. The first 2 years were relatively locked in at a low rate of 7%. And then the remaining 28 years was jumped up and went up to 11%, a 40% increase. And what's fascinating is if the prices of homes would have continued to increase from 200,000 to 250, or they were rising at 15 plus percent, this wouldn't have been an issue. But when they start rising at 8% or even declining, that's when the loans started having trouble because these loans weren't created to be sustained. They were created where the home prices go up and then people were refinancing and they're going to get a better deal or do this product again and hopefully better rates. So this is his kind of pin that he's looking at is when do the valuation of OpenAI, when does the valuation of Anthropic decline? That's what we want to be on the lookout for. Now, OpenAI on the totally opposite spectrum, or OpenAI was valued at 29 billion, and more recently it was valued again at a raise of $852 billion. So not the decline in real estate prices. This is massive increases. So why does this matter again is they need to spend on compute, spend on staff, spend on research, and they need to borrow lots of money. And who are they borrowing it from? These IOUs, Google, Oracle, Microsoft at massive levels. And what are they doing? They're borrowing money too because they need to grow and be the leader in this space. And their CapEx is now getting really interestingly close to their earnings levels. So this is where we're seeing kind of a harsh pullback in July, so far a little bit of a rebound so far. But the question is like what could be the pin that pulls or like the house of cards? And I'm not in any sense going to get political on this show. It's not my place. But the theme that Jay Martin said was China. And China has been very disruptive to many industries, specifically here in the United States, whether it's furniture in the 90s, clothes, making clothes at lower labor costs, toys, directly impacted me and my family. My father was worked in the sporting goods, toys, and stationery business. Steel, shipping, solar, electric vehicles, batteries, you name it, they have the ability to overtake and win. So why is this so important now is because China's Moonshot AI or Kimi came out with a new model that stunned the AI world. It was kind of swept under the rug pretty quick. And part of it was because it was generating high level AI at 40% lower cost and for free, open source for free. You download it. David Sachs, the AI's czar, says this is concerning. So, Mike, I'm going to turn it to you. So, we're going to get back into the storyline. So, we're making this interesting connection between not now, but later, when the valuation of OpenAI or Anthropic ever declines. This is what the dots are saying in 2006 is what if real estate doesn't necessarily decline, but the rate of growth slows. So why don't you share, Mike, just a little bit on the anatomy of a bubble, some of the readings you've been doing, and how we play this?
Yeah, absolutely. So you touched on the '08 great financial crisis driven by what was going on in the mortgage market, real estate prices. There have been so many other bubbles throughout history, and there have been many, many, many books written about the whole phenomenon of a bubble. There are a couple that have been recent reads that, you know, if you want to learn more about it, would be great to kind of pick up and at least peruse. One is called The History of the United States in Five Crashes, and the second is called Market Mayhem. So the first book by Scott Nations kind of covers the U.S. from the early 1900s on. The second one covers, it kind of steps outside the U.S., going all the way back to the tulip bubble back in the 1600s, which we've all heard fables about. So let's talk about, why does a bubble happen? A bubble's got three ingredients, and this is according to the Market Mayhem book by Lou Van Riet. Hopefully I'm pronouncing that right. The first one is information, a disparity in information, that the people that are actually driving the asset class, in this case, say AI, they know more than the investors. So as Lou puts it, that the people running the show know more than the people buying tickets, the investors. The second is, if you could kind of click forward, Scott, is incentives. So the folks kind of backing up the asset classes, bankers, brokers, etc., they're incented to move money, because every time they move money, they're making money. So that's how they're incented. It's not necessarily that the bankers and the brokers and other folks are villains per se. It's just how they're incented. And that's the way our financial system is set up. The third is the room. And this is the whole phenomenon of the social environment basically driving the narrative. This is the old, kind of when I forget who, some famous investor said, as soon as my shoe shine person is giving me stock tips, I know that we're in a bubble and it's about to burst. So this is kind of the narrative that Lou talks about, where it's this closed room where everybody's agreeing with everybody that this is an amazing thing and it's going to keep going forever. This time is different. So now let's go and just kind of break down the elements that Lou talks about of a bubble. Now, what we did is we actually took it and put it into our trend roadmap. Everybody, I'm sure, recognizes this graphic of our four stages: basing, advancing, topping, and declining. This is our trend roadmap. And we took Lou's elements and put it in here. The first one is in that U-turn phase where the bubble is picking up. It's the setup. It's the asset class starting to pick up steam. The next one is the boom. And that's when everything is kind of rocking and rolling and makes sense. Then the next is the euphoria. That's when logical price starts separating itself from valuation. It's like when things stop making sense. The next is the crack. There's something that kind of triggers. That's that first crack that often is only seen in retrospect. The historians talk about. It's who knows. Last week you had situational awareness, an AI hedge fund blow up. Who knows? We could look back in a year and say that was the crack. We just don't know. Probably not, but no. And then once you get to stage 4, you got the wreckage. That's when everything's falling apart. And lastly, you got the survivors. Every bubble has got survivors. And it could be the Warren Buffetts of the world who choose not to participate in the bubble and just step aside and hold their capital. Or it could be the folks that maybe short it, like Jesse Livermore did back in the stock market crash of 29 going into the Great Depression. But the bottom line is the point Lou makes, and I'll kind of flip it back to Scott in a second, but the point Lou makes, bottom line is, every bubble has got elements of real good stuff. It's got, like, for example, if AI ends up being a bubble, AI is here to stay. Or let's go back to the internet bubble of the late 1990s into 2000. The internet was here to stay. It's just a frothiness that bubbled over. So the point is that just about every bubble has got something that comes out of it. Could be financial regulation, whatever. Something good comes out of it that ends up echoing into the future. Scott, I'll flip it back to you to take a look at some charts.
There's no better way than to ask AI. And the answer is Joseph P. Kennedy Sr., father of John F. Kennedy, said, if shoeshine boys are given stock tips, it's time to get out of the market.
There you go. Thank you.
Yeah, there you go. Here's our trend roadmap. So what do we do? So Jay Martin, nothing wrong. He is that's his line of business. His incentive is to go buy commodities, hard gold and silver and different things like that. And I remember reading Michael Maloney's, like, the guide to gold and silver many years ago. And it was awesome in 2011. It was miserable in 2012. And then it was on a lost decade for gold for a while until the last 3 years. It's been booming. And it very likely may do that, continue to go up. We had a great run in gold personally in our newsletter and all over. And it's pulled in and it's starting to set up again. And what we do, our incentive is to try to be agnostic and to say, you know what, reality is we're going to follow the trend and we need a way to do so. And we use our trend roadmap. So let's just go through history just for a moment. In 2008, which was after 2006, so we're coming to you early with this fun documentation, 64% pullback in the SMH, pretty rough. Here's our trend roadmap on a daily chart. You can use your trend roadmap from TradingView or whatever service that you help follow the trend. But from the peak to the trough, you can kind of see where the break signal started, and it took a while for it to recover. It also happened in 2022, negative 48. During tariff time, negative 40. These are rough pullbacks. This is where, if you have enormous gains, that's a totally different story where you could minimize positions, you could hedge, you could do different things. But if you don't, this is be cautious because you need to have capital ready. You need to not have massive deterioration and you need to be ready for the booms. And there's so many on here, it's hard to show, but like 2013, 97% before you got to the next break, or 132% in the 2016, 17, 18 run. So what we're simply sharing is our belief system, and thank you for being a part of this, is following the trend roadmap to get through this. Protect when it's miserable and find massive opportunities when the dust eventually settles and the survivors are sitting there waiting for us. How do we find the survivors? We follow what the big money's doing. Okay, so we're going to pivot. And if you have questions, we'll head to the chat, but we're going to talk about the market if that works for everybody.
By the way, Scott, Ann made a great comment. The credit default swaps of the AI world, where you start hearing kind of that type of financial maneuvering happening in AI. And so, Ann, great point that there is some, once again, some echoes of the prior bubbles.
Totally. So, inflation. If the cost of capital goes up and everyone's borrowing money, that's not good. So, we need to have inflation tame. And CPI came out on Wednesday, which rose less than expected. So, 0.1% in July, annual rate of 3.4, nowhere near where Warsh wants it at 2. But the reality is it really depends on what's going on in the Middle East, and food and energy, which is extracted from this number, rose 0.2 and 2.5 respectively. So that's a calm month for inflation, which likely will tick higher. Wholesale prices, or the PPI, the producer price index, rose as well at zero point 0.2, again below expectations, so which is great. So this is a situation where you have the Fed likely not raising rates, about 30% probability coming up in September next month, and it's a 70-ish percent probability they're just going to hold tight, which the market really likes. And what likes it the most, likely precious metals and a few others, which we can look at later. But here's the chart of the S&P 500 from this morning on a gas signal. On a green positive momentum arrow, it kind of broke out of this range, formed a little bit of a flag. It's interesting where some of the underlying charts of the S&P don't look sublime, but the overall index has been holding up quite nice. The S&P looks stronger and nicer than the ONEQ, which is all of the NASDAQ, not just the top 100. Today, a down day. Some of these charts are from this morning. You're on a gas signal, short-term, long-term uptrend with confirmation. Maybe it just kind of consolidates a little bit and digests this run. We'll look at small caps, which there's your, we'll maybe call it a cup, there's your handle, and then you're kind of consolidating. Again, gas signal, positive momentum. This is why we're 100% or 99% exposed. International filled the gap. Gas signal, positive momentum, and just kind of chipping and climbing higher. Again, there's been a little bit of pullback as the morning's gone on, but overall, a strong environment for risk assets. Mike, when you're looking at the market health, what stands out to you?
Yeah, we remain at a 10 out of 10, which I think just verifies what you just laid out. Our percent invested is at 99%, so we're just about fully invested. Our beta is right around that of the market, give or take. 'Cause when the market moves X, we move about X, give or take. And our portfolio heat has ticked up a wee bit to 4.5% because we did take on a little bit more risk over this week, and we'll talk about that, what we added. But yeah, well, in fact, Scott, why don't you talk about the sector gauges if you don't mind?
Yeah, so strength to the right, weakness to the left, energy. It won't go away. So it moved 13 spots. It's at the top, it's at the far right. So XLE is interesting because we have XOP, the drillers, we have AMLP, the pipelines. How do you get oil around the strait? Is you pipeline it out. And it's interesting where it just stays, it was really close to our stop and then it never actually triggered. So now it's in profitable territory for some of that. Financial still acting really strong. The S&P as well. So these mega caps, which we'll look at in a minute, are holding up. Gold and international. What's not doing very well is Bitcoin, utilities. Real estate's trying to have some sort of a life if interest rates, likelihood of them not going up. Microsoft had a really great run, but still far from its all-time highs. Here's your financials, here's your energy. And nice to see Nvidia holding up, which is really important. Holding up over the past like spread of like 2 months, better than most of the semiconductor industry because it fell significantly less. And you have some challenges in Apple, which we let go of, Google, which we let go of, Broadcom. And then the challenge really comes just really two. It's Meta and Tesla. So that's kind of what we're watching. And these are the signals that we're following. It's just really, this is what it is. And we're trying to invest in strength and fade weakness.
Yeah, we had no close position. So this week in totality was a pretty tame week, which is a good thing because we've had some action-packed weeks of late. So no close positions. We did trim though MongoDB twice. And once we get into the live trading view, let's pop up MongoDB and we'll take a look at that. But we trimmed on the 10th and then again this morning. And we'll talk about why we did that once we have the chart up. And then we opened up two positions in the metals area. Silver miners, SIL, and COPX, COPX.
Yeah, so since we're just talking about it, might as well just
Let's
hit
do
it.
it.
So here's Mongo. I just draw trend lines sometimes, but I think it's up around 30%. And Mike, do you want to share? So why are we trimming in the trend roadmap strategy for those that like a smoother ride?
Yeah, in the trend roadmap, we will trim, and it's basically selling the strength for a couple of different reasons. In the case of MongoDB, the reason for twice this week is because our stop loss gap, our estimated gap to where the price was to our stop loss, was over 15%, becoming extended. And the position had become more than 5.5% of our portfolio. As many of you know, that we take on standard positions of 5%. So ideally, would have 20 positions of 5% each. And so when a stock like MongoDB blows out of the gate and extends itself, extends our risk, and becomes a larger part of the portfolio, we're going to trim it back to 5%. And that happened back in the 10th, and it happened again today. So that's the one scenario. And the other scenario, which is very rare, is when the RSI gets to 88 or higher. And that does happen occasionally. It has happened this year a couple times, but MongoDB fit that first criteria.
And there's a let's when you're this far extended, this is the 21 EMA, this is the 50 simple SMA, and this is the 200-day simple moving average. And when you get pretty extended, I mean, the reality is that it's like going to the beach. The waves do come in at some point. So in this particular strategy, even though there's some days where on this day yesterday, you're like, why did I trim? What's happening? But we know it's going to at some point pull in, set up, and then make another run higher if the reality of software continues to boom. So that's something that we do. And then
Yeah,
we'll
in
just
fact,
take a
Scott,
peek.
by the way, to your point, with MongoDB, it's also in our fast lane strategy, which is the all stock trend roadmap strategy. And we don't trim there. We let it run and grow. And now it's over 6% of the portfolio, and we're going to let it continue to grow. But we're taking on, with all stocks, we're taking on more risk to hopefully reap more upside reward. So that's how we do fast lane.
Yeah. And then again, so you have SIL on a polite pullback on a gas signal and COPX. This one, just due to cash availability, was not our traditional 5%. We could if we would, but had a little bit of a trouble the last 2 days, and now it's holding. Maybe it comes down and fills the gap, but we have our stops so that we let it breathe a little bit. I know there's a lot of people who have really tight leashes on positions, but this is a probability where it maybe pulls in or kind of could get significantly pull in, but then what we're expecting is at some point some version of a breakout. And if it doesn't, we have our risk managed. All right, let's open it to some questions.
Yep. All right. So I think we covered the question, Scott. So I tell you what, let's go ahead and we've got a half hour remaining, so we should have plenty of time to cover all these great tickers. So anything else, Scott, or let's do tickers, right?
Fire away.
All right. First one is SpaceX.
Okay, so SpaceX, just to share with you, if you go to the billion-dollar fund manager rank, that is on our list. It is, as of yesterday and today, number 53. So if you zoom down, it's always kind of fun to see MongoDB and shop near the top, but this is like the cream of the crop for us. But it's you come down to 53 SpaceX on the new list. So let's take a peek at it. Obviously, IPOs are challenging, and it's had a really great run off the bottom. But here's what's so cool about this is why Mike and everyone, I'm a little obsessed with this tool. So we have to wait for a little bit of data to come out, and you had all these red negative momentum arrows, and then they stopped on August 3rd. Now, for those that can't help themselves and they buy momentum, I would wait for the gas signal, but pretty wild. 20% from those kind of closes. But you see all the clustering of the green positive momentum, which doesn't mean anything that's going to happen with guarantees. It's just said there's a higher probability that it increases. And now this is your important day. August 7th. This is your gas plus confirmation. This is when it has the ability to show up on our lists, whether it's relative strength index increasing or its rate of change 14 in our all stock strategy. But this is now went from bearish to bullish until proven otherwise. Mike, what would you add? Maybe you have some sort of a stop here. Here's your 21 EMA. Pulling in on light volume, I would expect a pull in because the green momentum's gone, and maybe you come up and come out, and then maybe you start making another run. If it breaks down, there's your stop. But that's how I would consider playing it. Any thoughts for you, Mike?
Yeah, two things. First of all, at some point, if you want to do it here or at a future ticker, let's put on the boxes just to show, especially newer members, the new box feature.
Double click on the arrow, click show boxes. Here are your boxes. So this is when the box turned green, saying, hey, heads up, despite how nasty this is, the turn might be coming.
Yep. And we've covered the boxes a couple of weeks ago. We covered them and how somebody could possibly use them if you choose. The second
Refresher as
comment,
well. If
oh
you
yeah,
go to start here, rules and tools, come down to your trading view, get your trading view indicator. You do not need to have a paid account, a free account. It goes over all the details. Step one. Step two, add it to your chart. You're allowed two on the free version. You're allowed a watch list, which you can kind of tuck in and tuck out over here. But it's pretty sweet. I'm hooked.
yep. And then secondly, for newer members, you could go back into the video archive of these shows, and about 6 weeks ago, maybe 8 weeks ago, go back to the episode where we had Kathy Donnelly as a guest the day that SpaceX came out, the IPO started trading. And I think it's a great episode to get Kathy's insights. So if you haven't watched it, definitely recommend you watch it. Oh, it's 2 months ago now. Yeah, 8 weeks. Yep. There you go.
Yep. So down here are the slides. Click here to watch the video. It's all yours.
Yep. Excellent. All right. Next one is Cerebus.
CBRS. It is number 59 on our billion-dollar fund manager rank. So it's on there. You got the green box, so you can kind of see where I'm about to go. I'll just make it a little less noisy. I drew a line here. I think we've covered this one in the past. So gas signal plus confirmation happened on August 3rd. It had some sort of a boom and then a fade on earnings, and it's just kind of sitting here. And it's not at the top of our list because it's not just demonstrating massive performance increase, or it hasn't had the breakout. It hasn't had relative strength increase, but it could have. And this is where it could have. So maybe it's something where it kind of consolidates. I don't know. Maybe you could draw something like this, or you just say, you know what, this is my line in the sand. Obviously, it depends on your risk tolerance. But who knows? The funds are here, the trend is here. It's just had a little bit of a negative earnings reaction, probably based on guidance or something.
Yep. Yep. All right, great. Next is DRAM.
We're going to DRAM. So the memory ETF. Let's take a peek here. I'm not sure why I have all these lines here, but you're back on a gas signal. It's kind of cool. So let's go over here. This has been kind of a steaming hot area of the market back before the pullback, and it was been on overheat for ages, which is these orange boxes at the bottom. Had one last run, and here's where all the red arrows started showing up on July 1st, and they never really went away. We haven't received our confirmation signal, but it is on a gas signal, so it does deserve our attention. For me, this would be a pause and wait and see, but I think there's a chance that the tide has turned and maybe it starts to climb. And then just as a note, we fixed it, but Google Finance does not like this ticker, so sometimes the data that you're seeing in different places may look funny.
Yeah. So just yeah, be careful. Depending on what source you use for your stock prices, DRAM could be definitely an abnormal one.
Yeah. And it actually, which is kind of interesting, Mike, today it hit the exact resistance from July 21st and 23rd. So maybe right click and add an alert or whatever charting software you're doing, and there's your 50-day simple. So for those who like this, for those who just are busy, you could do buy stops, you could do conditional orders, you could do different things, and if it doesn't happen, it doesn't trigger.
Yep. Yeah, alerts are fantastic, but for those of us with busy lives, you want to be in DRAM, put the alert on, and just put it out of your mind until the alert goes off.
Yep.
All right. Next one is WGMI.
WNBC. This is the Bitcoin miners turn data center engines, compute power people.
Yep.
This is a wait in a no-go zone. We own this in here on this fun run, and we got out on a day two coast, and we were out in at the end of June. But you're on a short-term and long-term downtrend. You're underneath the 200-day simple. You're in this choppy mess. Mike, what do you see beyond me besides just wait and maybe set an alert?
Yeah, I'm totally I totally agree with what you said. I want to see it kind of clear this congestion. And even when another green arrow comes up showing momentum, let's see what the setup is before just jumping in.
And you're always welcome. You can go on the internet and just type in what are the top holdings. But from memory, it's Hut, which was a fast mover. It was Credo. It was a whole bunch of these like super fun, fast growing companies.
Yep.
Enbis and was another one that had a really good report or some sort of a news item yesterday. Nimbius, if I said that right.
Yeah, I think so. I think so. All right, the next one, Scott, going back to really the big guys driving the market is MAGs.
Yeah, so WGMI on our ETF rank was 93 out of 100, so that's not great.
Yeah.
We'll go to MAGs. That is the Magnificent Seven. I want to share something this is where I use the research, and I think it's pretty cool. So we're going to go to the hub. We're going to go to the ETF rank, and I'm going to click on the black area on the side and kind of scroll down slowly. So there's a pull in things that have been red hot. But here's the X Mag, which was a great member Jim shared with us, which is everything minus the Mag 7 is number 9, gas signal, pulling back a little bit on light action today from overheat to gas. Then you have your actual S&P 500. And then down here is Mags. Mags is number 45. So you got to go all the way down to find Mags. So it's interesting that it's not at all-time highs like the S&P or looking kind of like the Nasdaq or it's got some laggards in it. Gas signal, no confirmation of momentum, kind of a give back day to day. So I would say if one owns it somewhere way, way, way long ago, then that's a totally different story. But would I add to it today? No. If not, that'd be more of a hold with higher probability it climbs, but a hold.
Yeah. Yeah, if you happen to get into it on one of the recent momentum signals, the low of that first one, which was August, whatever, it looks like fourth-ish. The low of that day could be a good risk management point.
This would be right here.
Yep. And if you flipped on the boxes would show that pretty clearly. Mm.
Let's do it. This is a fun demo day. So there you go. You don't even need the line. You just add the boxes. Double click on the arrows, and there's your low.
Yep. All right. Next is semiconductors. Let's start with SOXX and then we'll go to SMH.
They're built a little bit different. Gas signal, no confirmation, hit the 50-day simple and rolled. Let's just do SMH, which is again, the weightings are a tiny bit different. Had a gas signal, had the confirmation yesterday, faded below the 50-day simple, so kind of within the range is what I would say. Mike, what stands out to you between these two? I tend to lean towards SMH at the moment, but I would set an alert at the 50-day simple, and if I owned it, it would be kind of a hold. I wouldn't be adding, and it would be a hold.
Yeah,
Or if not, it'd be a wait.
I think you cover it. And yeah, there's a couple of natural points of risk management if you are in it. And yeah, but I'd be a bit cautious here because is this over the past, let's call it week and a half? Is this a move showing renewed, let's call it short-term uptrend in semis, or is it the calm before another storm? We just don't know.
Yeah, and I think the line in the sand is right here. How's my drawing skills? So
There you
yeah,
go.
if it breaks up and over, then you're likely coming back up. And if not, this is where if one was shorting, this was the place to do it.
Yep. All right. So then we get to Devon's tickers, Max Linear.
This one has some serious growth behind it. Not act This is Devin, this is something so when a RSI goes past 88. From our study, it says be really cautious because a pullback or a consolidation is probably coming relatively soon. Doesn't necessarily mean sell the whole thing, but it just means just, hey, keep it on your list. And I'd keep it on a special watch list that this thing likely cooks again later. So you had a humongous change of events that happened even before this earnings report in April and it went up massively. I mean, this would have been a hard one, but let's just take the gas signal. I mean, that is 625% from the gas signal down here. Yes, you had earnings, overheat, beyond extreme overheat. And I think at some point, whether you draw it here, I think we're probably going to get our confirmation if it goes up just a little bit higher. But on the watch list, it's not a billion-dollar fund manager stock. Who knows? Maybe it will in the future. I think they were going after some other tickers in that networking space. But Mike, anything you'd share? Gas signal, keep it on the watch list. Dancing with the 50-day simple, some serious horsepower on this company's earnings and sales.
Yeah, so for the trend roadmap going back to April, if we had been in MXL and it hit that red X, that 88 RSI, that's the other scenario where we're trim. So we talked about why we trim MongoDB this week. That's the second scenario where we would proactively trim if you get that 88 RSI, and we probably would have done it again with that gap up.
And this is what happened in gold. So X is where I'm pointing. And then the consolidation. So sometimes it marks that the end of the story is coming soon. Some people call that a climax top, whatever you want to call it. And then I wouldn't be shocked if gold goes way higher at some point, but it needed to consolidate after a massive run.
Yeah. Yeah, and you know what, and we've thought though there's plenty of times where everything we do, it's about probabilities and edges. And so when you get that X or you get the yellow orange box of overheat, does it mean that the thing's going to stall out? No. It could keep going, and you just never know where it's going to keep going to. But it's just a simply saying, hey, be careful, be cautious. And in the case of our trend roadmap, hey, take some off the table.
Yeah, and here's the boxes. Look how pretty that is.
Yep.
But you're still in a red box until proven otherwise.
Yep. All right. And then Devin also wanted us to look at AMD.
Advanced micro devices. Day one gas. Here's probably your resistance, which it tested today and kind of pulled back in. I'd be waiting for the confirmation signal, but this isn't the shoe shine boy. This is the soccer dad. I was coaching my son. My son's 7. I was coaching his soccer team. I don't know. I think at some point I'm going to have to retire and just be a spectator. But a father was talking about AMD, and I was like, uh-oh. But this one has a super run from April on, and there's your X, and then it consolidated, and then it kept going, and now it's been in this chop for a while. Watch list. If one owns it way down here, this is a total hold. But I'd wait for that green confirmation, which might come on the breakout. And it's holding up extraordinarily well compared to its AI friends. So definitely one for the watch list.
Yep, spot on. All right. Thank you, Devin. And then Jim wants us to look at QQQ and then SPMO.
Cool. So we look at the Qs. Polite pull in, low volume, green confirmation gas looks fine. That has a lot of the AI plays in it. So if you look at that compared to 1Q, they look kind of similar, not too dissimilar. And then the other one was SPMO, which is a rotating, is it semi-annual or quarterly rotate? I always forget the name.
Semi-annual, and basically it's taking the top performers of the S&P 500. It's taking the top 100 of the 500.
This is on a gas signal. So with confirmation, so perfect would have been Wednesday, today. I think this goes higher. I think it has a nice date with that 160 range is the probability. It will it? I don't know, but could it consolidate a little bit more before running? I wouldn't count momentum out. We took our profits after a really good run. It's a hard one. It's like in the trend roadmap strategy where people want to do well, not get creamed. If you're going to own value, it's really hard. I mean, value's done so well, but the S&P can always keep chugging on you, and if you're diversified. But I do think this one goes higher, SPMO.
Yep. And if any new members want to check out the episode about probably 6 weeks ago, you can go back in the archives where we did a breakdown of I think 4 or 5 of the major momentum ETFs, including SPMO. You can go back and take a look at that. But yeah, these have got a lot more juice, but also potentially more volatility and downside risk. So please be careful.
Dr. Momentum. I think we top ticked it when we had the momentum. That's when we were selling.
Yeah. No, seriously, I think we did. Yeah.
Yeah. So unfortunately, it was a fun topic, but we faded it hard because the trend croaked on us.
Yep. All right. Thank you, Jim. And Tom would like us to look at Dell.
Yeah, this one seems so. This fell off our billion-dollar fund manager rank because of selling. And these funds, they've owned Dell for a long time. Why are they selling? Because they bought way, 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 way down here. That's just part of it. So I wouldn't take that too much. It could still go higher despite fund manager selling. And that's why we also look at the trend. And you do have a breakout, which is great. You have a gas signal. The more recent one was on August 3rd. And you just keep getting more and more confirmation that this thing wants to go higher. And I also love the fact that it's consolidated because its relative strength index went to extremes. It's kind of shook a lot of that off over the past 2.5 months, and it looks like it's trying to climb higher. Could it make one more kind of drop down and kind of throw everyone off a little bit and do one more shake and then rip? It's possible. But the funds have been selling into this, and it's part of the reason why it hasn't really moved since the bigger move earlier.
Yep. And the chart really doesn't tell the full story where Dell's been a bear to try to get into and hold. And for any Investors Business Daily folks that also partake in that world, you'll hear them talk about Dell and how it's shaking folks out left and right. It's not been an easy one, but as long as you can stomach the volatility and probably give it a wider berth, perhaps sizing your position down so that you can allow it to move around a bit more might be a good way to approach Dell.
That analogy always gets me. But I would say that there are some people who do trade ranges. This one's been a really great range trading stock, but I always never know, like, obviously you have a breakout, maybe the range is gone, but like how did you totally know? And I think
Yeah,
it's always great in hindsight.
exactly. All right. Next is gold, GLD.
Gold, gas signal on a little teeny tiny consolidation. So I don't know why, but it didn't love the PPI release, but it loved the CPI release. All of the inflation numbers. I, based on trend, I always say I think, but based on trend, let's draw a trend line. So you're right at the scene of the crime. I think this breaks up. I think this breaks out. I think it's real. As long as the price of gold doesn't totally collapse, I think gold and gold miners at some point later this year, next year go higher. But you're on a gas signal. I'd be waiting, and you'll likely get that confirmation as it comes up a little bit more. But I think the torture in gold at this moment, as shown here, is almost over.
Yeah, and Scott, Tom called out GLD, which I think is the exact same thing as IAU, correct?
Oh,
Yep.
sorry. It's yeah, one's more expensive than the other, but in theory they're hold gold in vaults in London or somewhere. So Fort Knox or who knows where. But if they don't, they don't. But it's a proxy for the price of gold.
All right, with 10 minutes left, let's slip into lightning mode, lightning round mode, and next one is AEM.
You go lightning. It's always hard for me.
Well, I'm trying to keep track of the tickers, so let's keep up with your
Okay.
analysis.
Overheat, be patient. I think it pulls in. I think you get a better price. But if one has the gall to buy a U-turn, you had a chance on August 5th and 6th, and I would say patiently wait as it consolidates on the 200 day.
There you go. CVX, which I think is what, Chevron, I believe.
It is. Looks great. Super duper. Yeah, that's the big chunk of XLE. Sorry for the fun lines. Gas signal, positive confirmation. You are breaking out over this consolidation range. I think you go for the highs. It looks like you're heading to 212 highs.
Yep. And then another one, Marathon, MPC.
This is going to be overheat. It has to be. I'd be cautious here. So your gas signal was way back in July. Your gas signal is way back in April. Your gas signal was way back in February and way back in January. You have come up so high. Whenever you get this, like, look how far away from all those moving averages that everyone else looks at. Overheat, overheat, overheat. You have to at some point consider trimming, or the market's going to trim for you. So my thought would be I would consider doing a little trim if it were me.
Yep. And then we'll round it out for Tom with XLE.
Same story. Looks great. Breakout, cup, handle, breakout.
Yep.
Exxon, Chevron, they all look great.
Yep. Every time we think that the energy thesis is going to collapse, it seems to pop its head back up.
Yep.
Yep. All right. Then Jim wants us to look at two momentum plays, XSMO.
We're going small cap. Looks great. Nice consolidation. Is that a VCP? Is that a volatility contraction pattern? Or I don't, I read his book years ago, but I don't totally know.
If it is, it's a sloppy one. I don't think it's a real clean one.
That's Mark Minervini, investing champion. Is that the right word? I don't really know. Anyway,
Yep.
I would say coming up the right side of a base, likely going higher. Your stops are really tight right over here. I think it goes higher.
And then XMMO, which I think is mid-cap momentum, is if memory serves.
Yeah,
Yep.
and in our world, we own small and mid cap indexes, so more broad-based, but the momentums look great too. So all the way from the fourth till today just keeps ticking. And this is kind of where what I wanted and what we coded is if I bought on August 4th, August 5th is like, ugh, yuck. Pulls down almost to the 21-day EMA, but underneath your likely your buy price. But that arrow says to me, just whatever you're thinking, however negative you get, just hold on to it. And then it recovers quickly, and now you're in profitability. So, this is what these arrows are designed for. Where if you're feeling yucky and you see a red arrow facing down, then maybe trim, at least do a partial. And if you see a green arrow on a with a gas signal, green background, go for it. Just keep your stops tight.
Yep. Thank you, Jim. And then Phyllis wants us to look at Halo.
Hey, Lozyme, I don't know. Are these guys profitable? I never really know the answer to that.
I
Um,
don't know, but look at that. Look at that nice move. Yeah. So Phyllis is asking, is this a flag after a big move?
they are profitable. Phyllis. It looks like it, but this is always kind of funny where okay, so you had great earnings reaction, right? So it jumped up 20% price discovery. The market didn't assume that they were doing this well. And then you're now getting some version of a discount. And I think these are the times where it's hard to buy gap ups at the high of the day. So could it come all the way down over time and chop chop and get you down closer to the low and shake more people out as possible? So this is why we wouldn't have added here, maybe here or down in here would have been our pristine, but this is a total hold and you own a leader that's making money and doing really well in the index. The biotech's coming back too.
Yeah, take another one. Take a look at $1 billion fund manager stock, HTFL, if memory serves, that just reported. Yeah, there you go. Reported this morning or last night.
Yeah, it's an interesting story, Heartflow.
Yeah, yeah. All right. Thank you, Phyllis. And then we've got Dennis would like us to look at ARK.
This one, the normal.
Yep.
Kathy's on a gas without confirmation. So if one would have bought on August 10th, you're still in. So to me, it's a wait or a hold, but you had three chances and now you're below your third chance. What does she own now? Tesla still, or I really don't know.
I have not been following her, but yeah, go back out. Oh yeah, go ahead, go ahead. Yeah.
The question is, how fast can you type? So Tesla, SpaceX, Tempest, CRISPR, Coinbase, Shopify, we own that. AMD, Circle, Robinhood. Who knows, right? But her, not the hottest of charts I've ever seen.
Correct. All right, thank you, Dennis. And then Jason's asking for for a CLS.
Celestica. That
There you
actually,
go. I was trying to remember. Yep, there you go.
that that has had a long consolidation pattern. Let's draw some
Yep.
boxes on this one. When I say draw, just literally add them. Yeah, I think if this thing can hold the 200 day, I think it goes I think it breaks out of this horrible consolidation since last year, and I think it starts moving more towards profitability. I don't believe it's on our report, but that doesn't necessarily need to stop you if you're just following the trend. But whenever it seems to I'll just look at the 200 day, which is an easy marker. It can undercut it, but it bounces really quick. It tested it and it bounced really quick, and it tested and it bounced really quick. If it had a horrible gap down, I'd be really concerned, but I see huge volume supporting it here. So maybe you form some cup or some kind of ugly looking flat base, and I think this goes higher.
Yep. By the way, going back to Halo, Devin asked pseudo high tight flag. Yeah, I have to go ahead and dust off my Bill O'Neill book on high tide flags or some other source, but yeah, I think it fits the definition, right, Scott?
I think so. I'd like to see it more tight, but yeah.
Yeah. All right. Then going back up to Jason wants us to look at Shopify, one of our holdings.
Yeah, gas signal. You'll notice that when you go to our report, it doesn't say possible add because the green confirmation's gone or it was on an overheat. So I would expect this to chop around. It had a really great earnings report over here on the gap up, and it's still holding the gap up. So for us, our trailing stop has been climbing, and our expectation is that it consolidates, makes a run for that 168, and then eventually makes a run for 182. And I'm going to move it to a monthly chart. And for all you green line breakout fans from the great Dr. Wish, who's on the YouTubes and the X's, whenever a stock is at all-time highs, you have a monthly cup and handle. There's no one left with losses. And if you're starting an online retail business, you're probably at least researching Shopify for your resources. And once it gets over here, which isn't that far away, 176 to 182, breakout city. It can go a lot higher.
And I could give the Peter Lynch testimony on Shopify that if anybody wants to get into e-commerce, it's a fantastic platform. All right. Then Salesforce, Scott. Jason, that's Jason's last ticker.
Alrighty. Salesforce rejected at the 200 day on a U-turn without confirmation. It would make sense that it consolidates. Salesforce. I always like when I was at Fidelity, they use Salesforce. We have Salesforce in our advisory practice. It's really hard to leave a good CRM. It really is. But I think you can see all the consolidations. This has been just a really tough chart, a tough chart. I think we'll probably look back years from now and it will be way higher. But I think you consolidate here and then break up and out. Is this one on our report, Mike? I cannot remember off the top of my head.
I'll tell you in a sec.
If it would, it would be at the bottom, I assume.
It is actually number 22.
Hot dog. Yeah, so I would expect consolidation, and then eventually it will turn to gas somewhere likely up in here. So would be the hope. Bearish to bullish. This is as bearish as it gets. It tried over here in 25 and then failed. I think you need to break up and over, sit on it, and then get your upward thrust, which this thing has not had. But you're just getting there, and then maybe you consolidate at the 200 level and then make your big run higher. But you need to have, I mean, these guys have AI. They just it hasn't had any love. Anyway, patience, but I think this one is a longer term recovery play, and earnings are on the 26th. So prepare yourself and buckle up for that.
Yeah, if one is bold enough to want to bite off of CRM in a U-turn, maybe a position size down, and you wait to develop a full position until it's on a gas.
It
All
undercut the
right.
low and then recovered right here.
Yep. Yep. Then Mark would like us to look at Intel and Rubric.
Intel's on our report, right? Or no, Rubric is.
I know Rubric is. Intel is number 62.
Hot dog. INTC, gas signal without confirmation. There's other things acting better, but this thing had a great run in April, and it's just consolidating, and you undercut this structure. For me, this would be a hold or a wait and set an alert. Maybe it could be near the 50-day or the highs of yesterday, but you'll probably get that confirmation relatively soon, that green arrow. So a patience. And then RBRK, we own this in our fast lane strategy, correct, Mike?
Yep.
Yeah, this one's done really well. So cybersecurity, and we bought it in the morning before it went overheat, if my memory serves. But yeah, gas signal, this is a hold. And if one wanted to, if they're in the trimming department, then that could be a trim here. And then as it kind of sits up for another maybe move higher.
Yeah, we bought on 8/7, August 7th. Yep.
Yep. So in the morning before the overheat.
Yep. All right. Thank you, Mark. And then we're kind of coming to the end here. Brent would like us to look at EIRL and Bank of America.
Ireland. What lovely people. So
Wow, look at that one.
yeah, who'd have thought, right? Gas signal, overheat, that's a hold or a wait and see, but that looks great. Anything you'd add on Ireland?
No, I think by the look of the chart and the daily action, there's probably liquidity, low liquidity, but for an ETF, that really shouldn't be a huge concern as we've covered in the past. But yeah, looks good.
What am I doing? Do we know any of these companies? Banks, insurance?
Ryanair for sure.
Sure, Ryanair. It's not Guinness or Kilkenny. It's legitimate banks. What was the other one? Sorry.
Bank of America.
Yeah, this one's on our report. This is a workhorse. This is a Buffett stock, right? This is where my concern is just this gradual stair stepper. At some point it comes in, but this one has defied all odds. Obviously, it would be way more fun to be buying in here. We do own it in our fast lane strategy as it just keeps making money. It's on an overheat. It's been like that forever. You get some red arrows, so I would assume it comes down and then makes another run higher. But Bank of America, this isn't your like neighborhood bank. They're doing M&A and they're helping raise lots of money and they're getting paid lots of money the same way Goldman Sachs does. So this is where they're making their juice.
Yep.
So yeah, the answer is wait. If you own it, hold. That's just my opinion. Please manage your own situation.
Yep. Thank you, Brent. And Bill comments and asks for UMAC, UMAC, one that he's been holding, not on our list, but I'm interested in this space, all things drones. Your thoughts on the chart and the viewpoint of IWR. I'm currently up 36% in 2 weeks. Backstory, President places tariffs on drone parts imported, and Don Jr. sits on the board of UMAC. So there you go.
There you go. Gas signal overheat. So if you were in here, that's a hold. Could it form some sort of a handle now that you're back at the highs? That's a very logical situation. I would assume these guys don't make any money. What do you think, Mike?
I'm going to guess they don't, but yeah, why don't you flick on the earnings announcement?
Sales high double digits to triple digits. They are losing money. So, but doesn't matter. The market at this moment doesn't care. So
Yep.
that's a hold. With managing, maybe raise your stops. But this is volatile and this is crazy. But there is an ETF now for drones. I don't know the ticker, but it's like DRO. I don't know. Drone something. Defiance. I don't know. Someone shared it with us, but the reality is there's a bunch of drones that are doing well, as some of their parts, I think, are no more exports to some certain countries.
Yeah, and Bill, for your risk management, maybe you use a moving average or you use just increasing higher lows, whatever suits your risk tolerance.
DRNZ Rex drone. I don't know if it's in there or not, but gas signal without confirmation, making a comeback.
There you go. Excellent. Thank you, Bill. Then Bob would like us to look at Netflix.
Mike, what are you watching on Netflix these days?
Just on there last night, what were we watching? Oh, we watched, I know what it was, the Field of Dreams game. If anybody's a big fan of Field of Dreams with Kevin Costner, every year MLB plays a game there. And last night, my Phillies were playing. Fantastic. So I was on Netflix.
Yeah, nice. Small ad or starter, but it's had a rough run. I know their merger or acquisition didn't work out, then the market rewarded them, and then the market failed them, and their subscriber growth has been a little sluggish. But I mean, this is one of these subscriptions that most people don't let go of for 10 to 14 or whatever dollars per month. But I would suspect you're now above this low consolidation in February, so could you make a run for the 200 day? That's what it looks like to me.
Okay. And we're definitely over time here. We've got four more. Let's bang them out super quick and call us a happy Friday. So Jason wants crowd strike, CRWD.
Um, Gas signal consolidating. That's a hold. It likely goes higher.
Yep. And then Jim to round us out, Rex, REX.
Well, we look
Oh,
at.
oh, drone ETF. Yeah. Okay, there you go. Yeah.
Oh, sweet. What's Crowd's billion-dollar fund manager rank?
It is
I'm sure it's nice. Sorry, dude.
no problem. It is
13.
number 13. Yep.
There you go. Back in the zone.
Yep. And then Jim's also calling out Jedi, JEDI, and BZZ. So I think those are other drone ETFs.
All right. So if you want diversified drones, there you go.
Yep. All right. All right. Excellent. So I think we covered it. If I missed anybody's comment or ticker, please either email us or put it here in the chat and we'll cover you next week. And thank you for your patience in us going long and have a fantastic weekend. Scott, I'll let you take us home.
Awesome. Again, thank you for being a member. Thanks for your time. We really appreciate you. Yeah. So again, I hope this was helpful. If you have any feedback for us, we're here for you. We hope this research helps you with just like one good idea can really move the needle here. And try your best to manage your risk. The market is trying to make a nice recovery, and we are exposed, and we're managing risk, and we hope that this is helpful. We'll leave you here on a Friday. So thanks. At the moment, the AI boom is in place. It's not a bust, but we will be prepared if so that ever happens to come to a theater near you. Have a great weekend. Talk soon. I hope this helped you identify some uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com.